Good morning, 7 o'clock Thursday morning, and it's about half an hour. Market's been open half an hour so far. And so here's the market at a glance. This is what's going on. The market pretty much closed down here yesterday, and it's bounced around. Overnight trading, it went up. And same thing with the NASDAQ. Overnight trading, the market came back up. And just to point, I put this here just to show you the market's been hanging out in this really tight range, 53-point range. It's a very tight range, so it needs to break out of this really soon. So the main objective of trading is making money. That's on both sides. People that are losing money, their objective is to make money. People who are making money, their objective is to make money. So they both had the same objective. So that means this market's only about two things. It's about buying and selling. And of course, you want to be on the right side of that. And in order to buy and sell, in order to make money, these markets have to retrace. So retracements are the strongest force in these markets because that's how money is made. Retracements can go right past a resistance and support line. If the market needs to retrace, if people need to make money, they can go right through a line of resistance and support. That's why volume and other indicators aren't really that important, because I've seen markets go up on low volume like it just did last week, a couple weeks ago. At hardly any volume in the market went up because this market's about one thing. It's about making money. It's not about volume. It's not about indicators. And it's about going up and down, and it's about retracement in order to make that money. You buy and you sell. So you got to keep that in mind. Okay, here's the ES, and this is a 30-minute chart just to give you an idea of what's going on. So yesterday the market actually poked up here in early morning trading. This is pre-trading. This is pre-market open. And then it came down and the market opened up somewhere around here, and then it shot down, came back up, and came down. So you can see the retracements. Market came down, and then it retraced down to here. Then it came back up, retraced again, came down, and it retraced. Okay, so that's what markets do. They go up, they go down. Same thing with this. This market went up here, and it came down and it retraced. You know, that's how they work. So what I did is I actually purchased some put options in here and wrote it down to here, and I was going to get out, and I decided a couple minutes right before the market closed to stay in. And so let's see if that was a good decision, because the market did come back up here. Now this looks like it moved pretty far, but it's only up about 15 points. So we'll see where the market goes. So you got to remember, this is the top right here, and it's only 7 o'clock. So that means this market has a lot of trading to do today. So this market can come back up here. If it comes up here early, then what's it going to do? It's going to have to start coming down. Unless we're in an uptrend. Then that changes the whole story. So if this market is going to break out of this area here and break above here and continue up, then it would make sense that this is going to continue up, break out, and keep going. If it's not, and eventually it's going to come down, then it's going to come up probably around here and then turn around and come back down. And so hanging on to my put positions here, because I feel like the market is probably going to do that. This is actually a good sign, believe it or not, the market going up this early, because that means we got another 5.5 hours of trading. Where's this market going to go? It can go up here. But usually when it starts going up in what I call the opposite direction early, then it's only got one other place to go, and that's to come down. So we'll see if that plays out. So you got to remember, markets have to retrace. So it came from here, went down to here, and now it's retraced. It's pretty close to 50%. So now at this point, it can go wherever it wants. It's already retraced, so that means it can start heading back down to here if it wanted to, or it can start heading up if this is a continuation of this bull run right here, this mini bull run, I should say, out of the big picture. So let's see how long this market can stay in this tight range. The reason why I mention a tight range is because you can only make so much money in these ranges. You know, there's not, and like I said, this market is about making money. So eventually it's going to have to break out in order to go in a certain direction in order to make more money or lose more money. You know, of course, the people that are making money, that means on the other side there's somebody who's losing money, and vice versa. Okay, so how do we play this? If the market is going to an hour chart right here, if the market does come back up here and it makes it up here, that could be another place to buy put options again and to short this. That would be my play. Of course, if the market takes off here and it's still early, it could possibly come back down. Now, if the market has already moved around quite a bit during the day and it starts to get later in the day, let's say past 10:30 Pacific Standard Time, which is midday, and it starts heading up in this area, well, there is a good chance that it can keep going. You know, that's usually if it's going to break out here, it's going to do that early if this market's going to go down. It's all this is going to play out early enough, and then eventually it'll come down. So let's see how this plays out. Like I said, this is actually a pretty good sign because this is meaning that it's just getting all the steam out of its system and possibly going in for a nice little downtrend today. But like I said before, the markets, since they're trading for about 6.5 hours, you know, they can't go in one direction for 6.5 hours. That would be considered a trend day, and that only happens once or twice a month. So if today's not a trend day, then that means that these markets usually go up and then they turn around and come down. Okay, so once again, if you see the markets, at least for me, if I see this market and it starts coming up here, especially with a really big spike up with a lot of energy like this, and comes up here and then starts settling down, this might be a really good position to get back into the market going down again. So so we'll see how this plays out. Let's take a look at what the Dow's doing. And the Dow is pretty close to its top right here. Now the Dow's only up 50 points, and that's actually nothing for the Dow. It's like a walk, you know, as opposed to a run. It's just it's nothing. 50 points is nothing, and so it can come up here, but it's getting really close to this top. Now it could actually come up here technically, and it could do that today. So we'll see what happens with the Dow. Nasdaq's got a lot of power behind it right now, and it's definitely gone from here to here, and it's retraced. Let's see how much it's retraced so far. There's that. So it's already in this hot zone right here. It's actually going past it. So it's already done its retracement. And it could technically turn around from here if it's going to go down. Now, if it's going to go up, then this can keep going. But eventually this is going to have to retrace from here to here. Even if it's going up, it's going to have to retrace at some point and then go up. So market's going up pretty good at this time, and that's, to me, that shows a sign of weakness. So let's see where this thing goes. Okay, and this is the Russell. Let's take a look at Russell in a 4-hour chart, and so that's where the Russell's at. it's pretty much hanging out in this area. It's not like the other indexes. It's not really moving a bunch. But I do watch it and see where this market's going. And before I get into any position, I want to make sure that all the indexes are in sync with each other. Meaning that they're, if I'm going to get in a position going down, that they're all going down pretty much the same time. Okay, here's the Dow Jones. Dow Jones has not really corrected, or it hasn't had a correction so far, and it needs to correct at least into these areas right here before going up again. Now it could go up again, and then it's really going to stretch it a lot, but it's already stretched out now. So let's see if this market starts heading down today and into next week, if it starts coming down in this area. So like I said, this market's about buying and selling. In a intraday chart, of course, you have these little ups and downs because people are buying and selling there. But in the big chart here, when this market starts coming up here, you're starting to gather a lot of the longer term traders, and they're buying and buying and buying. And now it's time to turn this around and wipe them out. And that's how this market's played. So let's see what happens there. Or if these guys are smart, these guys have been buying, then they're going to get to a point where they're eventually going to sell before this market turns around. Okay, so this is the ES again, and again this market is coming up like crazy. Look at that. And it's only not even 45 minutes in, or it's about 45 minutes into trading. So let's see if this thing fails, and if it fails in a big way, then it's probably going to come down in a big way too. So we'll see where this market goes. My position is this might even be a good place for me to buy some put options again going down. Okay, so that's the end of this video. I'll talk to you guys tomorrow.